Hey everyone, this is June from Turning Point Life Investment, and this is your market analysis for June 19th, 2010. Okay, let's start with the weekly view this time of SPY. I mentioned last week that there's a very good possibility we might be forming a right shoulder, and it seems like that right shoulder is already in progress. You can see how we have a nice bounce off of this support level of around 105. So the obvious level for that right shoulder is around this 115 area, and it seems like prices are approaching to that level. Now, I'm not saying it has to hit 115. Kind of like how this prior head and shoulders never really made it. The right shoulder never really made it as high as the left shoulder. So always keep that in mind. But at least now we have the form of that head and shoulders that I've mentioned before. Okay, now going into a daily view, we finally got some sense of direction as far as breakage. We did break outside of this consolidation range that the market has been stuck in for a good 3 weeks or so. So the only question is, will it be able to break above this current resistance of this 50-day moving average? I wouldn't get too excited just yet. I know the market just broke outside of this consolidation range, but there's still this resistance level to contend with, this 50-day moving average. So I would watch for that. If we can get a break above that, then sure, we can definitely go long and probably aim for 115. I think that would be the next obvious level of resistance, given that there's a gap. Also, given that the prior resistance around there as well. So 115 would be a logical level to shoot for if we can get above this 50-day moving average. But on the other hand, if the market dips back within this consolidation range, then that means we're not done correcting yet, because it's falling back within a trapped range. So always keep that in mind, that there's a possibility it might fall back in, or if we stall around this area, watch for a breakout above the 112.50 level. And lastly, going into the VIX, just taking a look at the sentiment. Sentiment is getting pretty low. You can see how we are almost oversold on the VIX. So anytime when the VIX is too bullish or too low, relatively low, so to speak, then that could be a cautionary sign that the market is too complacent, too bullish. So I would definitely watch for an oversold VIX to tell us that the market's hitting some kind of a extreme top. I wouldn't say extreme top, but a near-term top of some sort.